to provide some sort of relief. I mean, the company's got a margin of about 45%, which is at the top end for large pharma.
Hey, Mikey, is there any reason to believe that maybe the marketplace has been overestimating the size of this obesity drug market?
I think there's always a risk with an indication this size. When you look at the market potential, in the US alone, it's 130, 140 million patients, which is the target population.
Dude, that's one-third of our population, man.
Yeah, I mean, there is a risk that, perhaps consensus did get ahead of itself. But the difficulty here is, you have, huge runway of patients. There's obviously limited supply. So it's difficult to know kind of, how quickly that supply can come on board. Now, Novo gives guidance around, their growth prospects, where they think sales, et cetera, are going to go, but they keep, they don't necessarily quantify, the cadence of supply and how quickly that's going to come online. So that kind of makes forecasting quite difficult. And obviously they don't want to give that information because it's competitive information, and they don't want, Lilly to know about it either. So.
Boy, back in my analyst days, I would have slammed at this management team because that guidance was brutal. They were nowhere close to hitting it, and their big reduction in the guidance. And we see the stock down 22% today, down 37% year to date, 52-week low. So they're paying the price for it. Mikey Shaw, folks, he's one of the best healthcare pharma analysts in the city of London. Every institutional investor wants to talk to him. We appreciate getting a few minutes of his time. Mikey Shaw, senior pharma biotech analyst, Bloomberg Intelligence, over there in our London studios. I mean, let's stay with healthcare because it's not a whole lot better with this big insurance company, United Healthcare. That's one of the big ones in the marketplace. They had some disappointing results, took their guidance down a little bit. The stock's down 4.7% today, but it's down 47% year to date. It just seems like every week there's something on United Healthcare. So let's check in with Glenn Losov. He covers the stock and the industry for Bloomberg Intelligence. Glenn, what's going on with United Health? They really just can't seem to get out of their own way.
Yeah, so it's just not just United Healthcare. It's mainly managed care companies overall in 2Q and in the first half of the year. The biggest thing is basically that the companies are facing much higher medical costs, which were not correctly priced in going into the year. And this may continue probably until the end of the year. So the new catalyst and the near-term catalyst that we see is basically the 2026 earnings growth view that may change the sentiment for the United and for the rest of the group.
I mean, United Healthcare, Eden Prairie, Minnesota, 400,000 employees. I had no idea it was that big.
Yeah.
Incredible.
And covering 50 million, providing coverage for 50 million Americans.
Including yours truly. There you go.
So does United expect cost pressures, especially medical utilization, to ease this year or in 2025?
So it's very difficult to say. So the company and the rest of the sector projects that the medical costs will continue to be elevated. So the question is if they can correctly price the next year costs. And all of the health insurance companies, including United, are indicating that medical cost acceleration will continue next year.
So what did they get wrong, or what did the industry get wrong this year?
They basically mispriced the demand for care, acuity.
Isn't that their job?
It is, but listen, everyone makes mistakes.
Okay.
The issue is that the company like United, when they misprice, it's a shock because it's unusual for United to do so.
But I feel like, so the key problem facing United is that Americans are simply using more healthcare, but at the same time, we have government programs really clamping down on who's eligible for really subsidized coverage and changing payment formulas. How do you square the two then? It seems like one is a surplus and the other one is clamping down.
Well, the thing that you refer to will be more of an issue or a question mark for 2026. Right now, the medical cost acceleration, care utilization, higher costs of drugs, for example, higher need for behavioral care is what driving sort of pressures in 2025. those pressures may continue in 2026 on top of the big beautiful bill overhang.
So how is the Trump administration impacting your part of the healthcare world, the insurance side?
Well, with the looking at the 2026, beginning in 2026, there are two things that are coming up. First thing is the marketplace, which is ACA exchanges. Subsidies for those for that market side will so the subsidies will end at the end of 2025. So less people will enroll in the membership and for in marketplace, and for marketplace or for any insurance company, size is key to sort of generate profit. So obviously there's going to be some pressure on that. Longer term, Trump care, let's call it, is obviously pushing or will push for work requirements, which will pressure Medicaid membership. So all of these things are an overhang for health insurance companies like United.
You can't. I mean, our investors, what are they? They're just dumping these things, right? You can't.
Well, right now investors are washing their hands, but the companies, including United, are trading at below the 2 standard deviations over the 10-year average, which is becoming more appealing, right? So at one, assuming that these companies can price next year's benefit correctly, and combining that with the very discounted valuations right now, there could be an upside.
All right. I tell you, that's just one business. I have no idea how the economics work. I just keep making my payments every 2 weeks, and hopefully it all works out. That's how I do it. Glenn Losov, thank you so much. We appreciate that. Glenn Losov, he's the senior healthcare analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. Again, a tough day. Novo Nordisk stock down 20+%. United Healthcare off 4.5%. So in this marketplace, you disappoint on earnings, you're going to pay the price in a big way here. And we got a lot more earnings coming up this week. We've got some tech companies, Amazon, Microsoft. You're going to get some big tech names, and that'll be important for this marketplace. S&P 500, it's off about 6 points here today. We're going to have more coming up. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at lows of the session right now on the S&P 500 index. Stocks declining in this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. S&P lower, little changed as traders review economic data and corporate earnings ahead of the Fed decision tomorrow. 2 o'clock when it all comes down, 2:30, Jay Powell's news conference on Bloomberg Radio. S&P down 9, again underscoring low of the day, down 0.1%. The Dow down 179, down 0.4, and we've got NASDAQ lower by 36, drop there of 0.2%. 10-year 4.34%, the 2-year yield 3.89%. Gold up 0.4%, 33.27 the ounce, and West Texas Intermediate crude now at 67.51 a barrel, up by 1.2%. Consumer confidence increased in July after declining last month as concerns eased about the outlook for the broader economy and the labor market. Conference Board's gauge of confidence rose 2 points to 97.2. Stephanie Gouchard is senior economist